as a business owner, I'm sure you get a lot of self-doubt, and you think actually the daunting prospect of going from earning a very good salary to no salary, and actually the world's your oyster, and you sit there with your software and your contact book and think, right, I now need to go and make money and make this work.
This is the We Built This Business podcast. I'm your host, Daniel Osullivan. This is the podcast for UK business owners to share their journey, their knowledge, their sacrifices, and their successes. This podcast is sponsored by Team Building Experiences. If you're planning a team building event, away day, or corporate event, then check out team-building-experiences.co.uk and state podcast 15 in the comments to receive 15% off your proposal. Welcome to another episode of the We Built This Business podcast. Today, our guest is Jason Harris-Cohen of the Open Property Group. Jason has been the managing director for coming up to nearly 10 years this May. Jason, welcome to the podcast.
Thanks for having me, Daniel.
So, Jason, 10 years. How has it been?
Eventful, definitely, but interesting. Definitely a lot wiser was when I set up the business in 2014.
So what got you into the Open Property Group in the first place? Were you working in property previously?
Yes, I worked in property previously for about 8 years. I was at sort of end of the career, a sort of director of another property company in London, and always had a big passion for property. Very interesting sector, so many different areas that you can be involved in. And really just evolved from there. I always had an ambition to have my own business. So just the evolution from being an employee really was to become, a business owner and fulfill my ambition as an entrepreneur.
So the Open Property Group today, if we start with where you are now, how many people you employ, your revenue, that size of the business?
So we employ about 18 people now, sort of really grown year on year. Started out in 2014 with just 3 of us. One of the employees was my business partner's daughter, who just sort of wanted a step onto the property industry. And sort of as a business now, we've this year actually has been our sort of year ending. 2023 was our record turnover. So we reached sort of 18 million as a group turnover. Wow. So, huge growth from the sort of 200,000 turnover that we've done in year one.
Absolutely. So have you got your own offices? Where are you based?
So we're based in Gerrards Cross, Buckinghamshire. So we have one office, but we have a national presence. We've, built up a network of surveyors, property attendants, agents, property brokers, etc. throughout the UK. So there's pretty not, since we set up in 2014, we've completed about 1,200 transactions. So there's not really a town within the UK where we haven't bought within 5 miles of.
Wow. So complete nationwide coverage. And so I was looking at your website. So essentially, you buy any property. Is that any residential property, or is there also a commercial aspect as well?
So we have bought commercial. Our core focus is residential. We're residential property investors and traders. Mainly the focus of the business is that we help homeowners and landlords sell property quickly and easily. And that can be any type of property, flats, houses, bungalows, apartment blocks. The last few years, we've seen a massive rise in landlords looking to sell portfolios. So we will buy commercial, but we are very risk averse to it. I think, as we've seen, quite a correction in the economy over the last couple of years. Commercial is a sector which we've seen has been hit a lot harder than residential, where, investors now require much higher yields because there's a lot better alternative investments available. And we've now gone from, a very low interest environment to quite a high interest environment of recent standards anyway. So therefore, it's had quite a big impact on commercial property yields in that they've gone upwards quite rapidly. And therefore, that's had a reduction in the capital values.
So you said when you started, there was 3 of you. How did you start the Open Property Group?
So I started out, I was very keen and ambitious to have my own business, and I sort of saw a gap in the market in what I could improve and do better from my previous employment. And I just had this burning desire to have a free reign and just say reach my own ambitions. So I went to a friend, family friend, and sort of mentioned my business idea and put together a proposal. And from that, there was another friend of the friend that I went to who said, "Look, I'm also keen to get involved in this." So collectively, the three of us formed the business at the time. And we had a shareholders agreement with an initial business loan of £1 million that went into the business, which was essentially interest free for 2 years. So they was going to put in that £1 million equity injection that we could use to start trading and buying property, because it's very expensive to buy property, unfortunately, and £1 million doesn't get you that very far these days. So the £1 million quickly multiplied. But the first shareholders agreement was that £1 million investment, and the three of us went off and started trading in May 2014.
And obviously, having a couple of business partners as well, I imagine, really helped. That were just taking on the initial burden of starting a business. When you started, what was the kind of one thing that you kind of found more challenging than you expected?
I think in any business, cash flow is a major issue. Probably most businesses would end up unfortunately liquidating for lack of cash flow. And I think probably naively, as I say, we initially went with £1 million, and I thought that this would be enough to get us buying a lot of property for a couple of years. But after probably 4 or 5 months of trading, I realised that that's going to get eroded quite quickly. I say I was very ambitious, tenacious. I had a lot of existing relationships, and I was relentlessly working in relationships, all day, every day, trying to find and source deals. And I quickly realised that I was going to be able to actually source a lot more opportunities than I first thought. As a business owner, I'm sure you get a lot of self-doubt, and you think actually the daunting prospect of going from earning a very good salary to no salary, and actually the world's your oyster, and you sit there with your software and your contact book and think, right, I now need to go and make money and make this work and quickly get my income up. It was a quick learning process. I think one of the things for us, I remember just sitting there with a load of paperwork, because I didn't, at the time, our business very old fashioned. We didn't have CRM and things like that at the time. I wasn't aware of Salesforce. I used to do everything from Microsoft Office applications, Word and Excel. So it was sitting there with hundreds of leads to call that were on paper form, and it just was very scatty, unfortunately. So I think it was just a quick learning process of, we have to systemize, get our processes in place, get a workflow, and that would help us streamline the business.
Yeah, I think as well, as when you start from zero, you don't have any systems in play at all. So you do have to create everything, and on the cash flow side of things, it is hugely underestimated how much cash you actually need to run a business, especially when you've been on a salary basis. But obviously, you overcame that challenge.
Yeah, exactly. In our business, it's firstly buying property is very capital intensive, but secondly, we was in a very competitive sector. The property buying sector, we had some very strong competition who had been in business for many years. Had very strong balance sheets and market dominance. And for us, we had to go gain an entry into that market. So that involved a lot of investment in the brand, a lot of PR, a lot of marketing, a lot of advertising. And I loved, my background, I loved marketing. I had a real interest in it. I had a passion for it. So that helped, because it was something that I already knew about. But it meant that we had to invest a lot more money than I probably thought in order to gain a market share.
Yeah, and obviously those established players as well were already going to get a lot of the business that was already there effectively. So you were kind of trying to take it from them, as well as growing into the brand. The capital raising side of things, how did you go about raising more capital once you realized you needed to?
Lucky I had some very, friendly and helpful, supportive shareholders. So it was, can we go for lunch? I need to have a chat. That was one of the things. But I had some really good relationships with banks that I'd been working with, and say in previous employment that I built up strong relationships with. So in property, you've got many different ways. It's all about leverage. So, you have your equity slice, and you can leverage that by getting mezzanine finance, by getting, bridging lending, by getting mortgages, etc., and ultimately just leverage your equity. So I thought, well, how much do we actually need? We're going to probably 1 million was spent within 4 months, so probably need at least 3 million. So, how much more equity can we get, and then how much debt can we raise with that? And most lenders, an average is about 75% loan to value. So we'd put in 25% equity and then 75% debt. So as just in basic terms, buy a property for 100,000, you need 25,000 cash plus your soft costs, stamp duty, legal fees, etc. to buy, and then you raise debt finance from a lender for 75,000, and that enables you to buy that property, because that will enable you to massively scale the property buying, as opposed to buying 10 properties at 100k with £1 million investment. So we sort of went from there and worked out the best fundraising plan. And then raised some additional capital from the shareholders, and then from that we went to lenders and agreed a facility to be able to use their debt funding to be able to sort of leverage the equity that we had.
So on the marketing side, you've touched on that. It's a really big part of what you did in the beginning. How did you go about generating your first customer?
So at the time, before I had the business, as I say, when I was setting up, I'd say this was 10 years ago. So I was, a bit fresher at the time, probably had a little bit more energy than I do now. But it was, I used to even, at weekends go and, distribute leaflets in sort of local areas, put leaflets in shop windows, walk the streets on a Sunday, put leaflets through letterboxes. We used to do sort of advertising in local newspapers, and also a lot of Google SEO, so the search engine optimization marketing. So I used to write blogs, spending the evening writing blogs and, brand awareness that way. So it was a lot easier. The algorithm was a lot easier to understand probably 10 years ago as well. And things have changed there. It's much harder now to get page one market presence on search engine optimization, especially in such a competitive industry. But as I say, I used to just invest a lot of time, money, and energy into that brand recognition and building up, leads onto the website organically. I think we started out probably with a marketing budget of about 5,000 a month. That budget today is £65,000 a month. So
It's grown exponentially.
Exactly. It's even more, like most businesses now, significantly more competitive than it was at the time. But also with inflation and now such a more broad range of marketing channels, we've had to invest a lot more heavily, but also a lot broader in our approach. Where we used to maybe focus on 3 channels, we now focus on 50 channels.
Do you get involved with any content marketing? So obviously we're on a podcast today, but do you do like your own YouTube channel? Do you have TikTok? Do you do any of those kind of mediums as well to get customers?
It's all about, in business, I think, focusing on who your audience is. So you need to understand, in some industries, if you feel you have a younger audience, personally, my opinion is that is more focused towards the likes of Instagram, TikTok, and other social media channels. For our market, we're buying property off people, and therefore it's the most important decision of most people's life, selling your property. So our typical audience is someone aged 50 plus. Frankly, most of our customers wouldn't use TikTok. So we have to look at other channels which are best suited to that market. We do a lot of content marketing. We've written hundreds of blogs on the website. We do lots of PR. We produce lots of in-house content from our data. And as I say, we've done a lot of digital sort of on-page marketing.
Yeah. So a load of different avenues, but like you said, targeted to the actual customer that you're looking for. With staffing, as you've grown, how have you managed to you mentioned about getting the right staff with the right values. How have you managed to implement a process where you can kind of make sure that that is something that happens in your business?
I I think that firstly it comes down to that interview process, and I think it's just being, quite rigorous in the selection of who you want to interview. So, we use recruitment agents, for example. Most of our staff have come from recruitment agents, and we just do a sort of rigorous check originally. We don't just get people in for an interview for the sake of it. I think that like now that having digital meetings has helped a lot because you can just get things over quickly. And if you have a feeling in an interview and you have a Zoom meeting and it lasts 10 minutes and you just don't get a feeling, you can politely say that unfortunately it's not going to work out, and you haven't wasted an hour of your time sitting in a meeting that you don't want to be in. So I'm very time conscious. I don't like wasting my time, and I like to just try and get to the point quite quickly. So it's asking a lot more questions to the recruiter, having that rigorous interview process, going through the phase of interviews, getting a good feeling for someone, understanding if they do share the same values as you, and getting them to demonstrate what their achievements have been. When we set up the business, my business partner was a long-term family friend. His two daughters were some of my first employees, along with my mum, my sister. So essentially, we are a family business. We've always employed ideally from within, whether it's from our immediate family or from family friends. So we have a good understanding of who the people are, their background, and an understanding if they share the same values as us.
Because I think that's one of the biggest challenges, especially for businesses at the moment. I don't know if you've found it in the hiring market at the moment. It is very challenging to get the right staff. I wanted to ask, obviously, when you went through the COVID pandemic, what was the impact on the business that you experienced? Obviously, we are 4 years. I think it's either tomorrow or the day after since we went into lockdown. How did that impact the Open Property Group?
Had a big impact. Very big impact emotionally. But I think luckily the property market wasn't that badly affected by COVID. I think the world had obviously disastrous consequences, but surprisingly, property did prove to be extremely resilient. It obviously led to a huge surge in people looking to relocate. So I think the initial period, we had that inertia, sort of inertia period of 6 months where no one knew what was going to happen and how bad this was going to be. And, financial markets were crashing, and it just seemed like Armageddon. But actually, I think that when you sort of, managed to take stock of everything going on and you was able to look ahead of visibility, I saw it as an opportunity. I saw it as an opportunity that our competitors, a lot of them stopped trading or paused trading. That meant that we had very strong financial backing at the time, and we was able to capitalize on an opportunity. So although, it was disastrous and it was completely unprecedented, I think that for us as a business, it did create a huge amount of opportunity as well, whilst we had to also be extremely risk averse because it was so volatile. We didn't know what way things were going to turn, and the outlook was changing by the week, unfortunately.
Yeah, I mean, it was especially those first 2 or 3 months, it was just so chaotic. Did you find that, obviously, with people being based at home in the cities, there was, feedback that I got that a lot of people kind of took stock of their lives and were like, I'm based in a flat in London or wherever it is, and I'm going to move to the country. Did you kind of find that there was a number of people relocating as a result of that?
Yeah, I think that proved the resilience in the property market is that people, like exactly like you said, they thought, well, if I'm going to be working from home for the foreseeable future, and at the time we really did think it would be for the foreseeable future. The kind of days of offices were gone, and people were talking about never returning to the city, and people got very comfortable and used to working from home. So if that's the case, you want the best environment. It's like you want a cool, sexy office. At home, you're sitting there, you're in a flat, you can't go outside. It was great, weather at the time in March, April. I remember it being, unusually hot at that time of year. And people thought, well, actually, I want to go and live by the seaside. Let's get out to the south coast. So there was a huge amount of relocation, which created, fortunately, a higher volume of property transactions, although they fell, largely. there was still that lag effect because there was already so much agreed in the pipeline, up to COVID, and people when it continued with their property move. But fortunately, most estate agents were able to continue working and found solutions. Really, I think that proves sort of entrepreneurship and business owner. You have to be able to make quick decisions and find other solutions, and it's just sort of finding an opportunity in every situation.
During that period, did you go out and were you still able to go and visit the properties? I suppose once lockdown the first lockdown expired around May, June time, didn't it? Were you able to go and visit properties?
Yeah, I think as soon as the opportunity arose that we was legally able to, and I think sort of estate agents did become one of the key worker type businesses that were permitted to keep working. Yes, we obviously had to, because we had to carry on surveying our properties that we were buying. So, fortunately, our lender at the period, they did allow us to complete drive-bys, but that leads to mistakes because, sometimes there will be an issue internally in the property, such as damp or structural problem or roofing issue, that we were unable to identify from an external inspection. So we continued buying property, but there was a period where we had to rely on drive-bys. There was never a period, even in the peak of COVID, where we didn't buy any property. We were still buying property on a weekly basis, but it did mean that we had to, adapt our strategy and our process and take more risk, essentially. And there was an effect on that. That you're going to make mistakes. So it was a period that was very difficult. And you've obviously got challenges at home. Got two young kids who were 4 years younger at the time. So my youngest was 2. It was a difficult period being at home with, I don't know how my wife does it, to be honest. But, kids screaming in the background, coming into your office while you're on a call, shouting daddy. They want to play with you. You feel like a bad parent because you're preoccupied in your business. So you're not giving them the time that they need. But equally, they don't understand that you're trying to run your business while going through extremely challenging period financially and emotionally, and also trying to be a good family person.
Yeah, I mean, I've got 2 young kids myself, and during lockdown we had one at that point, so we had a 3-year-old, and yeah, I found that very challenging, especially trying to work from home when you can hear them causing chaos in the next room. What's your philosophy on homework now? Do you and your team still do some work from home, or are you all fully back in the office?
We're fully back in the office. We were as soon as we were able to. I'm a big supporter of working from the office. I say collaborating together, being together. I'm not a huge fan of the digital meeting platforms, etc. Although they have a very important role. I think that for me, I do like face-to-face interaction, and there's so many problems with technology, internet connection, things like that. You go to a meeting, someone can't get their camera on, and then or they forget the meeting. There's just so many things that happen. So it's great. I say it's a very useful platform, and it's obviously evolved massively. But I very much want to be in the office with my team. But I'm also flexible in that now. It has given you an understanding that you can all work from home. So if someone said to me that they can't come in tomorrow because they're expecting an important delivery and they're going to work from home, then fine. I am flexible, but I am a massive supporter of working from the business together with your team.
Yeah, I'm 100% on your page. I think it builds culture, and one of the problems that we had when everyone was working from home was that culture aspect. People didn't know each other, they didn't see each other every day, and when they were coming into the office, people were strangers almost. They were just kind of siloed, keeping in. They did what they did, and they didn't worry too much about what was going on elsewhere. And we made a decision about 2 years ago to bring everyone back in. I think it's been hugely positive.
Yeah, our office is about 800 square feet. It's an open plan office, so I can hear and see everyone at all times. And although I have my own separate office within the open plan area, it's only partitioned by glass, so it's quite easily for me to hear the rest of the office. There's countless examples where I hear someone on the phone, and I think they could improve potentially what they're saying, or there's just a cue that I can give to them. So after the phone call, I just say, look, on that call, I heard you say this. How about next time you say this? And just give them that support. Whereas if someone was working from home now, wouldn't hear any of them conversations, unless I ask them to record for me, which you can do. But we are a smaller business. We haven't got a huge hierarchy. I'm the managing director and founder of the business, but I'm also very hands-on with it. If there's calls to make and there's the sales team are all off with COVID or a virus, I'll jump on the phone and I'll make the sales calls. I'm happy to get stuck in. I also want to keep my foot in the door in that respect. I don't just want to go back to, writing emails and managing people. I like to be very much involved in it and learn and grow with my team, and also give them guidance and, vice versa.
Yeah, I think it's a really, really important aspect, being able to hear what's going on and what people are saying, because again, that's the message that your customers are getting and the interaction they're getting with you. Going on to your current portfolio, so you're now up to 150 properties. Are they based all over the UK?
Based all over, based mainly England and Wales. We have bought in Scotland before, but now our main focus is England and Wales. So we've currently got sort of 150 properties, market value in excess of £25 million. So built up a significant portfolio. Essentially, we operate a bit like a property fund, in that we have, about 70% of the property is rent, so the portfolio is rented. So the other 30% is what we actively trade on a daily basis. But we buy a lot of properties with tenants in situ. So then properties that we purchase, they will be with rental income coming in. We'll acquire the properties. We'll look if we want to retain it in our portfolio. And if we do, we'll normally refinance it onto longer term finance, such as a buy-to-let mortgage that we'll fix for as long as possible, typically 5 years. So we've got that interest rate certainty. And then we take a net margin between our net rent after our expenses and our interest payment that we pay to the lender. And then essentially you can look at that as our net margin, and we're just looking to scale that, significantly.
And do you have, a vision for, you mentioned 5 years time, where, the number of properties that you're looking for, or is it more the market cap essentially?
I think for us now, it's just all about profitability. We've had many years of just reinvesting, a lot of capital into the business, into the people, into technology. We've recently, built a new custom Salesforce CRM system. So, customized it for all of our business operations and processes. There was a significant investment. We're always reinvesting in new marketing and, trying to keep ourselves as one of the market leaders. And it's very expensive and, capital intensive to keep up that market share and to keep improving. But I think now, as a business, ultimately, we've got, significant turnover, huge increase in EBITDA, but I'm just really now looking at net profit and, making the company as successful as possible with a resilient balance sheet. So we kind of feel like we've probably peaked at the moment on the buy-to-let side. So now it's about, increasing the property trading. So improving relationships there to find new avenues to acquire properties below market value that we can asset manage and resell. Increasing the number of property acquisitions, reducing the cost of our debt. So that increases profitability. If we reduce 1 or 2% off the cost of our debt, you have an instant increase in our bottom line, and making the business run as efficiently as possible. So looking at all aspects of the business, how we can save costs, how we can streamline, how we can run more efficiently.
One of the challenges that you must have experienced significantly in the last 18 months is the interest rates increase. How has that had an impact on the business, and how have you had to adapt your business to effectively still continue trading profitable?
Yeah, it's had a huge effect. I think property is so sensitive to interest rates. So, as an example, we agreed a revolving credit facility of circa £10 million back in 2022. At that point, our cost of debt was 6.5 to 7% per annum. Okay, as a comparison today, the cheapest cost of our debt on a short-term basis is 9% per annum. Okay, so we've had a 3% increase in that cost of debt. You know, ultimately all that does is affects your bottom line. So we've had to service that increased debt cost. So it means that we have to look, be a little bit harder on the purchasing. So buy better. We sort of make our money in the buying price. The market has been difficult over the last 18 months. It's been a very challenging period, probably the most challenging market I've had, since sort of the recession, '08 recession. And that's meant that we've needed to just look at the quality of stock that we're buying. So, where we're potentially now servicing higher debt cost, buy better on the properties, and that will ultimately try and balance itself out.
Yeah, I suppose with buying a lot of property as well, have you made any bad investments in that time?
Yeah, plenty. Look, the volume of business that we do, I think, say last year, I think completed about 180 transactions in the last financial year to April 23. This year it will exceed that, should be circa 200. That's it. That's in the year of property trades between acquisition and sales. You know, as just looking at our buy to let portfolio, we used to finance, let's say, at about, so before the Ukraine war, or and also before the trust budget, when inflation's gone erratic and obviously interest rates have significantly increased, we were refinancing our portfolio at 4%, and we was looking at about 7% yield on our buy to let portfolio. So nice margin there. Now you're looking at buy to let mortgages at about 5.5%. So you've sort of halved the net margin unless you increase the yield on the buy to let. So I'm a big believer in the Northern Powerhouse. It's an area where, a huge portion of our portfolio we buy in the northwest, and generally the north of England, a lot around the Midlands, where we've had the benefit, if it ever happens, but of HS2. So, huge improvements in infrastructure, transport time, local gentrification that's going to happen as a result of that. And that's enabled us to get high yields. So we might have to go further afield into Cumbria to achieve a 10-11% yield, but we'd still be able to maintain the margins by refinancing at 5.5%, because we're now working on high yields. But frankly, that means that sometimes the quality of stock isn't as good because you're going into more deprived areas. The rental market is phenomenal. We've got properties where we're putting on the market and we're getting 30 applications within 48 hours. So there's not been any shortage of demand from tenants. But in terms of actually buying the quality of stock, as I say, our core focus has been the likes of Manchester, Leeds, Liverpool, Birmingham, Coventry, these areas where we are strong believers in the investment prospects of the market. But if you're chasing yield, you could have a headline yield of 15%, but you're buying in a very deprived area where you've got high delinquency rates on tenants, where you've got much higher void periods, where you've got a lot more antisocial behaviour and crime rates. And all these things can affect your asset and also the capital value. So you've got to balance the quality of stock and the capital appreciation versus the yield you're getting.
Cool. I mean, yeah, it makes complete sense, doesn't it? And I imagine covering the country, you've seen the very differences in this nation, from the highs to the lows, effectively. With your moving on to your branding of the business. So one thing I was really impressed with was the way your brand stood out when I searched for you online. So much so that even one of your competitors is actually searching. When I search for you, they're putting your brand name in their advert, which is always a good strong sign that you've got something. How did you kind of build that up over time? Is it something that you focused on, or was it something that you brought some outside help to work with you on?
A lot of it is me, So, well, that there's been a huge amount of resource and time from external, from external contracts, etc., from SEO agency, PR agency, Google pay-per-click agency. So there's a lot of people in the external team that we engage to build the brand. But as I say, a lot of it, ultimately, I've got a relentless pursuit to build, scale the business and grow a very strong, credible, trusted brand. So, when there's an opportunity such as, today you've kindly invited me to do this podcast, I'll normally take the opportunity because I see it as also an opportunity to shout further about our brand. And also ultimately it's a value, hopefully, help your business and bring some presence to your podcast, but equally it gives something back to me and Open Property Group.
Yeah, absolutely. I'm a big believer in leverage time. So, you do the work once and you get paid for years and years and years. That's the great thing with a lot of content marketing and a lot of the work, I guess, you've been doing in the branding as, it's compounded over time.
Exactly. I think with business marketing, etc., it's all about planting the seeds just regularly, consistently, reoccurring. It's just that reoccurrence of brand recognition, of putting yourself out there, whether it's doing a social media post on Twitter, on Facebook. It's doing an Instagram post. It's writing a blog that can be picked up organically in the search engine reports, or it's going to do a podcast or speak on your YouTube channel. In the early days, it was a lot of content I produced on YouTube. But as we spoke about earlier, it's all now I've got little time. None of us have enough time in the day, so it's trying to use that time wisely. I haven't got time to be doing videos every day and attending podcasts because we all go back to our inbox and we've got 200 emails to answer. So it's difficult getting the balance, but also it's just about getting value back from whatever you do. And I just believe that the more you put into the business, you'll get the dividends back in the future, like you said earlier.
Yeah, no, completely agree. Really good advice. So, obviously, Jason, going forward, you've mentioned your ambition. Where do you want to take the Open Property Group?
We want to be a market leader. We want to be the market leader in our sector. We want to keep scaling the buy-to-let portfolio of quality assets, build that up. I'd like to launch a property fund, a real estate investment trust or similar to that, where we're able to take in external institutional investment into the business. My ambition is to start with a sort of £50 million fund, take that to 100 million, hopefully up to 150 million within the next 5 years, to potentially buy 1,000 properties and be one of the sort of UK's leading private landlords, to continue trading profitably in Open Property Group, increasing the brand presence there, and also, maybe finding some external investors where we can reduce the cost of debt, increase profitability in the business by running more efficiently.
Brilliant. I mean, 1,000 properties sounds very, very challenging. So you've got a good target there.
Yeah, we don't aim lightly. We've got to go big.
Exactly. Go big or go home.
That's
So
it.
obviously people that have listened today, Jason, how can they find out more about the Open Property Group and yourself?
There's obviously a wealth of information online on Google. If you search Open Property Group, you'll find a lot more information about us. I do have a YouTube channel. We've recently introduced Instagram to the marketing as well. I say it doesn't ideally suit our target audience, but it's all about brand awareness and that PR. So keen to share information, new, articles, data that we release on various marketing channels.
Brilliant. So just before we go, one bit of advice, if you could. So we're a big focus on entrepreneurs. We believe this country is full of fantastic people that want to set their own business up and are planning or in the process of doing so. What one piece of advice would you give to a person looking to start a business in 2024?
Plan, just do a very, very comprehensive business plan. Think about cash flow, think about how long you can last with the capital you have available, think about what other options you have available to you if you did have a cash flow issue, and just invest in the business. I think it's very difficult to run a successful business on a shoestring budget. So I think if you do want to grow your business, you need to have a full plan of how you're going to scale it, how you're going to fund and how much money you're going to have in investment in the marketing, because unfortunately the phone doesn't just ring. You need to get yourself out there, network, and if you can't afford to invest a meaningful amount in marketing, then just make sure you spread the word as widely as possible on free sites such as social media. LinkedIn is free. I get huge results. I think I've got 8,500 followers or so. Every time I make a post, I get a potential new connection, a free connection of someone who we can add value to each other's life. And I've seen a massive increase in business just from, regular posting on the likes of LinkedIn that's free. So, get your word out there, go and meet people, attend networking events, go and speak to everyone. Don't be afraid, put your name out there, go and shake someone's hand and tell them who you are, what you do, and ask the same to them and how you can help each other. And then get your name out there on social media and try and build your business organically with much smaller investment.
That's brilliant. Yeah, it's all about getting your name out there as early as possible, isn't it? And telling people what you do, because without customers, you don't have a business, and that's what you need. And I think it's one of the main focuses for any new start. You've just got to put pretty much all of your effort once you've got a product into that marketing area, and that will hopefully get you going. Because the first year in business is probably one of the toughest I think you can ever experience once you start for the first time. Lovely. Well, that was Jason. So we're back next week. If you follow or like us or rate us on Spotify or other podcast channels, we'll be back with another guest next week.